Here is a summary of PayPal's 2025 Q2 earnings call, focusing on key financial metrics, management's outlook, and significant statements. Overall performance and management tone. PayPal delivered a strong second quarter of 2025, showcasing profitable growth and building momentum in its transformation into a comprehensive commerce platform. Both CEO Alex Chriss and CFO Jamie Miller expressed confidence in the company's strategic execution and future growth prospects, highlighting tangible progress across key initiatives. The sentiment was optimistic, emphasizing accelerated innovation and a focus on delivering value to consumers and merchants. Key financial metrics. Transaction margin dollars, TM dollars, excluding interest on customer balances, grew 8% year-over-year, marking the sixth consecutive quarter of profitable growth. This growth was driven by strong credit performance, branded checkout flow-through, improved PSP profitability, and Venmo. Non-GAAP earnings per share, EPS, increased by 18% year-over-year, benefiting from share buybacks and a favorable tax rate, which offset headwinds from lower interest rates. Total payment volume, TPV, grew 6% on a spot basis and 5% on a currency-neutral basis to nearly $444 billion. Branded experiences TPV grew 8% currency-neutral, driven by improvements in online and offline branded experiences, payment services, and Venmo. Online branded checkout TPV grew 5% currency-neutral, consistent with recent trends, though impacted by headwinds from platforms and merchants in Asia due to tariffs. Buy now, pay later, PYPL volume grew over 20%, with monthly active accounts climbing 18%. Venmo TPV increased 12%, representing its highest growth rate in 3 years, driven by product innovation and marketing campaigns repositioning it as an everyday commerce platform. PSP TPV grew 2%, with Braintree TPV being roughly flat as the company completed its renegotiation of unprofitable volume. An acceleration is expected in the second half of the year. Transaction revenue accelerated to 4% growth on a spot and currency-neutral basis to $7.4 billion. Excluding Braintree, transaction revenue grew 7% currency-neutral. Other value-added services revenue grew 16% to $847 million, primarily driven by consumer and merchant credit. Net loan receivables ended the quarter at $6.9 billion, up 7% sequentially, with strong performance in PYPL and international consumer revolve portfolios. Transaction take rate declined by 4 basis points to 1.68%, influenced by foreign exchange hedges, product, and merchant mix. Non-GAAP operating income grew 13% to over $1.6 billion, with non-GAAP operating margin increasing about 130 basis points to nearly 20%. Free cash flow. Adjusted free cash flow was $656 million. The company continues to expect full-year free cash flow of $6 billion to $7 billion. Active accounts. Total active accounts grew 2% to 438 million, and monthly active accounts grew 2% year-over-year to 226 million. Transactions per active account, excluding PSP, grew 4%. Share repurchases. Completed $1.5 billion in repurchases during the quarter, bringing the total over the past 4 quarters to $6 billion. Management's forecasts and future outlook. Third quarter 2025 guidance. Currency-neutral revenue growth expected at the lower end of mid-single digits, approximately 4%. TM dollars growth expected around 6%, excluding interest on customer balances. Non-GAAP EPS projected between $1.18 to $1.22, roughly in line with the prior year at the midpoint. Full year 2025 guidance. TM dollars expected between $15.35 billion and $15.5 billion, representing 5% to 6% growth. TM dollars growth excluding interest on customer balances expected between 6% to 7%. Non-GAAP EPS projected between $5.15 to $5.30, representing 11% to 14% growth. Approximately $6 billion in share buybacks. Free cash flow of approximately $6 billion to $7 billion. The company anticipates an accelerated rate of growth for branded experiences over the next few quarters and years. Significant risk factors. Macroeconomic uncertainty. The company is closely monitoring potential impacts of tariffs and other trade friction on global economic activity, spending, and supply chains. E-commerce spending deceleration. The low end of the full-year guidance accounts for potential deceleration in e-commerce spending. Tariff impacts. Tariffs have already caused a slight deceleration in branded checkout volumes from certain Asian platforms. Transaction loss rates. An increase in transaction losses was observed, attributed to normalization from last year's strong performance and new product introductions. While expected to stabilize, it remains an area of focus. Competition. While not explicitly detailed as a risk, the company's strategy to innovate and expand its platform, like PayPal World, suggests awareness of the competitive landscape in digital payments. Policy and regulatory changes. While not a primary focus in this call, broader financial services and crypto regulations remain an ongoing consideration for companies in this sector. Highlights. Profitable growth. Achieve the sixth consecutive quarter of profitable growth with strong TM dollars expansion. Strategic initiative momentum. Significant progress reported across all four strategic growth drivers. Winning checkout, scaling Omni, growing Venmo, driving PSP profitability, and scaling next-gen growth vectors. Venmo's turnaround. Venmo delivered outstanding growth in revenue and TPV, demonstrating a successful repositioning as an everyday commerce platform. PYPL strength continues to deliver strong growth, with significant increases in volume and active accounts, and a higher average order value. Omni-channel expansion, strong momentum in debit card TPV and monthly active accounts, with successful rollouts of new physical cards and international expansion, Germany, with UK planned. PayPal World announcement. A major initiative to create an interoperable global platform for digital wallets, aiming to connect billions of users and merchants. PSP business inflection. The Braintree business has passed the peak pressure from renegotiations and is expected to return to volume growth. Innovation in AI, ads, and crypto. Active development and early partnerships in agentic AI, new ad formats, and the PYUSD stablecoin, positioning PayPal for future commerce trends. Increased operating leverage, achieved through top-line growth and cost discipline. Lowlights, online branded checkout headwinds. Tariffs impacted volumes from certain Asian platforms, causing a slight deceleration, although the underlying business remained stable. Transaction loss increase. A slight uptick in transaction losses, though the company expects it to stabilize at a slightly higher run rate than last year. Credit growth deceleration. Expected slower credit growth in the second half due to tougher prior year comparisons. Interest rate headwinds. Anticipated interest rate headwinds will impact TM dollars in the second half of the year. Most important statements. CEO Alex Chris. FinTech is in its infancy, and we believe the next 5 years are likely to see more change in how people shop than the last 2 decades combined. Our strategy is laser-focused on anticipating and fulfilling what customers need today and what they'll expect tomorrow, whether they're buying online, in-store, or through AI agents. PayPal World will mean access to billions of new customers through their existing branded checkout integration. The pace of our innovation has accelerated significantly. This is in large part due to our efforts to consolidate our platforms, strengthen our infrastructure and leverage AI across the company. There is something magical happening with Venmo right now, and I'm excited about where we're heading there as well. CFO Jamie Miller. PayPal delivered another quarter of profitable growth. Transaction margin dollars grew 8%, excluding interest on customer balances. We are confident that the actions we are taking today position us well to accelerate over time. We expect to return to volume growth in the third quarter as we drive profitable front book business, support our existing merchant base, and continue to lean more into value-added services. We are raising our full-year guidance for both TM dollars and non-GAAP EPS. The full-year run rate for transaction losses to be about 8 BPS, so up from last year, but not as high as the second quarter. This summary provides a detailed overview of PayPal's 2025 Q2 performance, outlook, and strategic priorities.